Great. Well, it's great to be back in Oslo. It's been a little while, close to, I want to say 17 years actually. But it's really nice to be here. Thank you very much for having me. I know that I'm the last thing standing between you and a well-deserved drink at the bar, so I think we have 40 minutes allocated, but maybe we'll move a little quicker. But also, if we have time for questions, that would be great. I always like to ask before I start about people's level of familiarity with this topic, and I think there's a pretty wide range from what I can gather in the room. There's some people who are very technically oriented, who are really deep into the weeds of this stuff, but how many people are still considering themselves, if you're not afraid to raise your hand, relatively new to this, still kind of wrapping your heads around it? Wow, okay. I put myself in that category, by the way, too, so I think we're all still pretty new here, but that's good. I do have some introductory slides, which I think will be useful before we get into more substantive content. But just a little bit more about myself, beyond the fact that I'm at the Cambridge Center for Alternative Finance, which this is as of February I moved there. The Center for Alternative Finance focuses on cryptocurrencies, distributed ledgers. That's what I was brought in to do, and I was the first person brought in full-time to work on that. But they also publish benchmarking reports on crowdfunding, peer-to-peer lending. We're looking at all forms of alt finance, new channels that are emerging kind of outside of the traditional regulated financial services sector. So that's what the center's doing. Come to our website, check out some of our reports. We're building a really nice collection of data around alt finance. I'm the founder of a startup called Macro Digest. That's what the MD stands for. It's macrodigest.com. It's funded by the LSE, Center for Macroeconomics. It's basically like a Google News for macroeconomics. So anything related to systemic risk, currencies, sovereign debt, et cetera, come to macrodigest.com to learn about that. And then last but not least, and probably the reason I'm here, is that for the last couple of years, I've been publishing the CoinDesk State of Bitcoin and Blockchain reports. Today you're going to get a bit of a preview of the Q1 report, which we'll be releasing at the Consensus Conference in New York in early May. So you're the first to see some of the content. Now that sounds great, except for the fact it's still a little rough around the edges. So there's kind of positives and negatives to being first. But you can come to coindesk.com and check out those reports. They're free to download. We publish them quarterly, and there we really track what's going on with the industry and try to provide some perspective on events and things. So today, just want to talk about four things. I'm glad to hear that there's some newbies still in the room, and not everyone's a blockchain master yet, because I do have some introductory slides. Talk about the state of blockchain. I want to talk about Bitcoin briefly as well, and then wrap up with some thoughts on what's to come. So first, an introduction. This slide is actually a little bit washed out for some reason. Do we know why the colors are not?
It's been like that.
Has it? Okay. Okay. So this has got two concentric circles. I'm going to draw here with the laser. There's a circle over here around the ledgers and the networks, the Visas, DTCC, PayPal, et cetera. And there's a circle over here around assets like gold, dollar, stocks, and bonds. So traditionally, these assets, right, have been separate from the ledgers and networks on which they move, the rails. And what's really interesting and unique, I think, about cryptocurrency systems and blockchain systems is the fact that these are integrated systems. The asset and the network and the ledger are combined into one entity. That's pretty powerful. Historically, that's not been the case. They've been separate, right? Dollars move on PayPal's rails. Stocks trade on the New York Stock Exchange's, exchange platform. This is integrated. So that's and the part that we're interested or really kind of thinking about today is this ledger network part. That's the blockchain part that we're more focused on today. Who can tell me who invented the term blockchain and where it was first used? Does anyone know that? Yeah, neither do I. It wasn't in Satoshi Nakamoto's paper. Satoshi is the inventor of the blockchain, invented it alongside Bitcoin. That's what made Bitcoin really possible. But nowhere in that paper does Satoshi actually use the word blockchain. Satoshi refers to things like proof of work chain. Now, maybe subsequently in a forum or an email, Satoshi may have coined the term blockchain, but that's one question. No one really seems to know where this term actually came from. The other thing I'll point out about Satoshi's white paper, which was published on Halloween on a crypto site, is that the title It says electronic cash system. Satoshi very much, I think, thought of Bitcoin and the blockchain originally as a means to deliver something like digital cash, not as a means, primarily at least, to do all these other things that we're talking about blockchains for today. And that may have implications for how effective, Bitcoin's blockchain can be for basically doing a lot of non-currency type activities. You may have seen some of these slides already. This is just a visual depiction of a blockchain, a series of transactions kind of bundled together in blocks, linked together back to the beginning of time, the beginning of the blockchain at least. But if you think of like the kind of real world analog, or what is it a blockchain is doing, it's really a new mechanism for achieving trust and cooperation, a new digital handshake, if you will. That's how I try to explain kind of what fundamentally a blockchain is doing to people who are not tech savvy like all of you. That sounds kind of dull and boring to a lot of people. It's just a new ledger, a new way of achieving trust. Well, I think The Economist, I think said it quite well. They did a piece on blockchain in the autumn of 2015, where they compared it to double entry bookkeeping, accounting, and joint stock companies. These are rather mundane, boring things that actually can have huge economic implications. These two things, double entry bookkeeping, accounting, and joint stock companies, I think were very much a part of the Industrial Revolution and the tremendous growth of capitalism. So blockchain technology, another kind of boring thing maybe, could actually be quite powerful, have a huge impact as well. There's lots of terms that are circulating around to describe blockchains today. So distributed ledgers is one of my preferred terms for kind of a more generic description of everything that kind of is called a blockchain. But you'll see terms like permissioned and permissionless, mutual, shared, open ledgers, creating a lot of confusion, right? What is all this? And you get conversations like this one. Has anyone already used this Dilbert slide today? No? So Dilbert's boss says, I think I want a blockchain, right? And does he understand what he said? Or is it something he read in a trade magazine? Dilbert's wondering. So Dilbert asks, so what color do you want your blockchain? And the boss says, well, I think I'd like it in mauve. It has more RAM, I've heard. A lot of hype and confusion in this space. Everybody know what that is? What do you see when you look at that there? What is that, first of all? Who can tell me what that is even? Thank you. The Rorschach test. What is the point of a Rorschach test? Right, but when two people look at that, what happens? Do they see the same thing, or? I'm just going to hand the microphone over to you, sir. I step aside. Very, very in-depth answer. Much more than I was looking for. Excellent. The idea behind the Rorschach test, Swiss psychoanalyst, I think, came out with this in the 1920s, is that you look at this and you see something different than someone else, but it does give you some clue as kind of your psycho state and whatnot, as the gentleman back there so eloquently put it. Blockchain to me is kind of like a Rorschach test. Some people look at this stuff and they see, oh, this is decentralized, this is open, this is public. Other people look at blockchain and they see permissioned and private and points of control. And so that's one of the fascinating, I think, and confusing things about blockchain technology is that it can elicit these very different reactions, very different perspectives on how it can be used. Yeah. But I think fundamentally the big way I'm thinking about blockchain technology these days, at least, is that the big distinctions between public and private chains. And I know there's probably been some discussion about that already today, but let me just briefly review kind of the key differences across certain qualities. Obviously, public meaning open. People have read-write access to it. It's not restricted in that way as a private one can be, or private ones can also, though, be open as well. In terms of speed, generally speaking, all other things being equal, centralized systems, private systems, could be faster, should be faster than a decentralized one. I think there's obviously exceptions to that, but that's one thing you can keep in mind when thinking about the differences between public and private. In terms of security, obviously a private one is going to have some kind of permissioning system with accepting certain people into using it. That's one of the key ideas behind having a whole private blockchain to begin with, whereas security in a public system is going to be more open, secured with proof of work, proof of stake, and other protocols. Identity, if you have a private system, you're probably going to have to reveal who you are to whoever's controlling access to the system, whereas you can operate anonymously or pseudonymously in a public system. And then, again, there's exceptions to this, but in terms of assets that can operate on these different blockchains, native assets are generally more associated with public chains like Bitcoin, Ethereum, Ripple. They have a native coin that is inherent, that's part of the system like we discussed earlier, whereas private systems, I think, are being more discussed for things not necessarily native to the digital blockchain itself. Okay, so that was the end of my brief kind of introduction to blockchain. So let's go through the current state of blockchain. So there's been over $1 billion raised by Bitcoin and blockchain companies over the last several years, 1.1 billion as the last count. That's a big number. Not nearly as big as fintech, though. Fintech has raised a lot more money than that, but still a significant number. So if you look at how that pie is distributed, about 40% of it, of the 1.1 billion, has gone to what I call either blockchain or hybrid companies, so almost half. And that share is rising pretty quickly. What is a blockchain versus a Bitcoin versus a hybrid company? Let's talk about that. And this is a lot of what I try to do with these State of Bitcoin reports, right? Is I try to categorize and develop frameworks to track kind of where the movement is in the sector. So a Bitcoin company, and I think of a Bitcoin company as like a BitPay or a Circle or an Abra. These are companies that are doing currency activities, all right? So they're dealing with payments, there's exchange trading, there's remittances, there's some type of currency transaction that's really at the heart of what the company does. A blockchain company like a Factum, for example, which is dealing things with like land registries, it's still a financial asset, right? But it's not a currency transaction. You're not transacting currency across borders. You're not exchanging one currency for another. You're not making a payment. More about information management, non-currency, right? That's a blockchain company. Hybrid companies, an example of this would be a company like ItBit, which is a New York-based exchange, which then developed a product called BankChain. By the way, any company I mention, I'm not endorsing. I'm just using these companies as examples. They developed kind of a blockchain product that goes along with their exchange platform. And so they're kind of a hybrid. They're both a Bitcoin and a blockchain company. And that's how these numbers are being calculated in terms of growth. So last quarter, the end of Q4 2015, about 36% of the total space was Bitcoin, or was blockchain or hybrid. It's up to about 40% now. Okay. Here's the trend. And it was looking really grim in terms of Bitcoin, blockchain, VC investment. It's been kind of trending down. This is kind of quarterly growth and all-time VC investment. The growth rate has been going down. Now, part of that's kind of a law of large numbers effect, where the larger your number is, you're trying to grow on top of it, it gets harder to increase that at the same percentage. But the good news is we saw a rebound here in Q1. The total grew 17%. There was quite a bit of investment in the first quarter. And this is in contrast to what's going on in the overall venture environment right now. So the overall venture environment is going down steadily, including in Q1, whereas Bitcoin blockchain had an up quarter. So that's a good sign at least. So this is the traditional way I classified the Bitcoin kind of ecosystem in terms of companies. It was actually a pretty simple classification system because it kind of mapped really nicely to the traditional financial services system in terms of where companies fit and what they did. You had companies that were wallets, right, like Szabo and others. You had payment processor. These were kind of the Visas and the MasterCards of the world, like BitPay. You had infrastructure companies that were providing kind of more of the fundamental infrastructure, like multi-signature wallets, like BitGo and others. Exchanges where you could trade. Financial services included like ATMs, remittances companies, and then in the center were these universal companies that were doing a combination of these things on the periphery. All right, so that's what it meant to be a universal. A company like Coinbase has an exchange, a wallet. They're also a payment processor, so that's why they're in the middle here as a universal. That was a pretty easy kind of ecosystem framework to design for the Bitcoin world. Now, blockchain's gotten a little more complicated, and the best that I've come up with is actually something based on a conversation that Chris Skinner, who I know was here earlier, had with Chain, which is looking at public and private blockchain companies, but also looking at two other categories, whether or not companies are trying to be a platform, all right, or are more interested in kind of selling software into organizations, a la what an IBM, a la what an Oracle and SAP does, all right, more of a packaged software approach. And so here you can think of public platform companies. So a platform is something that's more general purpose, right, that people can build on, do lots of things. Ethereum being, of course, a great example of that. Bitcoin is another example of that. That's your kind of your classic public platform example. A private platform would look something more like a Ripple or a Blockstream. And I want you to give me some feedback on this, by the way. This is what remember I gave you that disclaimer at the beginning about how this is pretty new and raw. There may be some things you can push back on here within, yep, already, good. Right. And so this is the only, I've got them in the public, this is after. So they're meant to be kind of a public, more open service. But it's unclear whether they're going to be a platform or more of a software solution. I put them in the software category for now because it looks to me like people might be able to just grab bits of software from Hyperledger and use it. I think it's still a little early, right? But in terms of private platforms, so Blockstream, is most famous for building side chains, wanting to build side chains on the Bitcoin protocol. You can kind of think of those as kind of a complementary platform, if you will, to an existing platform. But there's a lot of companies down in this lower right quadrant, it appears, kind of doing private software solutions for firms. That seems to be a really crowded quadrant. I don't have all the logos in there yet, but that's just something to think about. I'll be presenting more detail on this in New York next month. Okay. All right, so let's go on to Bitcoin. Some people don't like to talk about Bitcoin or the coin side of this at blockchain events. Is everyone comfortable with Bitcoin, by the way? Okay. So I mentioned ISIS during the panel, the last panel there. So ISIS declared that it was going to have its own currency, right, a year and a half ago, and has actually gone on to create its own currency. This has prompted a lot. This is all part of a kind of broader regulatory discussion around virtual currencies or digital currencies, depending upon what jurisdiction you're in. But I think the most common term is virtual currencies. That's the one policymakers seem the most comfortable with. European regulators are talking about actually, bringing in some new restrictions on virtual currencies like Bitcoin. Part of it's because there's a worry that organizations like ISIS might use virtual currencies to fund operations in places like Brussels or Paris, or actually even launch their own virtual currencies. So the RAND organization, very famous defense think tank, published a very lengthy report kind of exploring the probabilities that an ISIS or some other non-state actor, some other entity that might pose a risk, might want to take virtual currency software and actually launch their own virtual currency, an ISIS coin, if you will. I just want to briefly say I think that's a very, very unlikely scenario. And the reason is really there's just way too many attack vectors to take out a virtual currency system, even one as robust as Bitcoin's blockchain. Now, it would take a very powerful, very sophisticated actor, of course, to disrupt something as big as the Bitcoin blockchain. But, denial of service attacks, spamming the network. I mean, there's just an endless list of ways that you could really, if you're a state actor, go after not only something like Bitcoin, but especially a smaller, more fledgling virtual currency. And so the probability that someone like ISIS would want to do something like this, I think, is very low. Furthermore, there's all these problems with using virtual currencies to actually engage in illegal activity. There's a trace, there's a trail, there's a record of it. The other problem is there's just not that many things you can buy with virtual currency, right? So if you routed money from, say, the Middle East to a Paris, if you will, you still have to convert then into the local currency to actually buy the things you need to commit your acts. So there's all sorts of problems with this scenario, and it's for that reason. It's no wonder that ISIS, when they created their currency, I think it's not circulating quite yet, but it's a gold coin. As I mentioned during the panel, that still is probably the ultimate decentralized currency, gold. So very, very low probability. Where this could become more likely is, if these things become pervasive, if virtual currency becomes so big, like the internet or the electricity system, that an adversary couldn't easily turn it off. You can't just easily go into a country and turn off the electricity system. That's when you might see, a terrorist organization maybe starting to use something like a virtual currency. So moving to the kind of macroeconomic side of things, there's been some really interesting things going on with countries like China, the Netherlands, the UK, Tunisia, Ecuador, announcing an interest in putting out their own Bitcoin-like digital currency. This is quite interesting. The details on this have all been pretty vague. Of the organizations that are working on this, I think the Bank of England, it's fair to say, is the furthest along. They've written several papers. They have a very detailed macroeconomics paper modeling what the impact on the economy would be if they issued a Bitcoin-like digital currency. That's all really interesting and something to keep an eye on. Blockchains, I think, fundamentally can produce public goods, and so it wouldn't surprise me to see states and central banks get more involved with this technology because of the public good nature of it. But what I want to talk about here is something a little more speculative, and this is pure conjecture. Let me be perfectly clear here that this is kind of a wild eye suggestion, but I want to put it out there anyway. I think there's some interesting scenarios where China could want to, say, get more involved with Bitcoin specifically. As probably many of you know, over half of all Bitcoin mining is actually taking place inside the Great Firewall of China, right? So that puts the Chinese in a relatively privileged position to, say, influence the development of the Bitcoin network. Combine that with the fact that China, for a long time, has actually been looking to grow its financial stature. All right, so they recently saw their currency, the renminbi, added to the IMF's SDRs alongside the dollar, the euro, the pound, and the yen. That's like a basket of reserve currencies. They've been buying a lot of gold. Gold is the world's traditional reserve currency, but they'll have a really hard time ever catching up to not only the United States because it owns so much, but also Germany, Italy, and other countries. And part of that's just because those countries already have a lot, but also gold's really expensive. Gold costs $6 trillion. I think the total value of all the gold in the world is something like $6 trillion. So anyway, this is a very long-winded way of saying that it could be really interesting for China to try to create a new reserve asset that they could have a controlling interest in or have some kind of influence over. And of what's out there, Bitcoin seems like an interesting candidate from the Chinese perspective. They could acquire a bunch of it for pretty cheap. The total value of all the Bitcoin in the world is about $6 billion roughly. They have some influence on the network. It's already starting to be accepted globally, so it might have an easier time gaining global acceptance than, say, a Chinese digital currency. If I were the Chinese, it'd be something I would think about. So anyway, that's, again, pure speculation. But I have more about that on my blog, on my website, if you're interested in reading the theory behind that. The other thing I just want to mention going on here with Bitcoin is there's this really big push to think about getting rid of cash in certain parts of the world. I know, in Scandinavia, Sweden, I don't know as much about Norway. Is Norway as cashless as Sweden? I mean, 93% more so. Okay. So you guys are already cashless, basically. South Korea has announced that they are going cashless by 2020. Yeah, they're committed to this. So this isn't just some like, oh, we want to get rid of the 500 euro note or the $100 bill. This is starting to accelerate, and it's accelerating for a lot of reasons. A lot of things are coming together here, right? So it's not just, oh, paper seems so outdated. You've got issues around negative interest rates and what central bankers are trying to do to try to spur economic growth. Just briefly, because you have an economist here, I'll explain what's going on there. Traditionally, central banks haven't dropped interest rates below zero because they worry that people would pull all their money out of the banks and put it in cash. I mean, if you were getting charged 5-10% to keep your money in a bank, would you leave it there? Or would you put it under the mattress or try to find some other place with, you could use cash to dodge that technique, but without cash, central banks could charge negative rates, and in theory that could help prompt spending because you'd rather spend the money than see it eaten up by a negative interest rate. You've got concerns around terrorism financing, tax evasion, money laundering, the Panama Papers. A lot of forces are conspiring to kind of think about to consider maybe moving away from cash. And that's going to have, I think, potentially interesting implications for things like Bitcoin, for things like zero cash, alternatives that offer some degree of privacy once cash is going to go away. I don't know when it's going to go away, but I mean, it's going away sooner rather than later, I think. A lot of people are pretty dismissive of, say, Bitcoin or any cryptocurrency's potential to really become a true global currency. And I think in some ways they're right, because the big problem with Bitcoin or any of these currencies is that, cryptocurrencies, is you don't get paid in Bitcoin, right? How many people actually get their salary in Bitcoin? One person. I asked CoinDesk to pay me in Bitcoin, but they wouldn't do it. So, so there's, for the average person, there's always this extra step to have to actually go out and acquire Bitcoin. And that right there is a deal killer. Not to mention you can't pay your tax with and all these other things. But I think the biggest problem is the fact that people just don't get paid in cryptocurrency. But the Internet of Things, which I know people have been talking about today, all right, could potentially solve this. I think 21's vision of kind of embedded chips in everyday devices, powering a financial network, so kind of an ambient financial system, right? Bitfury has also developed devices that could do this, where they're mining Bitcoin or mining a cryptocurrency and providing the network backbone. I think that's a potentially really interesting way in which machines could start to get paid in a cryptocurrency and then could transact with each other. And they don't care about doing foreign currency conversions like we do. Humans hate doing foreign currency conversions. When you travel to a new place, you hate the mental gymnastics you have to go through to calculate prices. We don't like trying to do 8 decimal places. Machines don't care about that, though. So a lot of the problems that humans have with adapting to, say, something like a cryptocurrency could be mitigated with something like the Internet of Things. And something like a cryptocurrency and a blockchain could innovate quickly enough to keep up with the Internet of Things. I'm not so sure that national currency systems, national payment systems are going to move quickly enough to follow the pace of innovation of the Internet of Things. So that's where I think potentially the greatest potential is for cryptocurrency. Okay, final section. So looking ahead, I think we've already, our last panel kind of covered this actually a little bit, like what are the kind of weaknesses of blockchain technology. I don't know if I want to spend any more time on this actually. Let's just skip that one. So just to wrap, I'm going to try to keep this at a pretty high level here to wrap up here. So a lot of people, when they look at this space, they say it's like, watching the birth of the internet again when they look at blockchain. When you think about what the internet accomplished, and this is a slide that Balaji Srinivasan, the CEO of 21, put together, so I'm shamelessly stealing his slide here. But the telecommunications company, the phone company, was really the gatekeeper. If you wanted to do anything in terms of sending information, deploying code on the network backbone, you had to go through the phone company. The internet changed that. Through a common set of protocols, anyone could transmit information anywhere. Really opened things up. Bitcoin does basically the same thing. Blockchain does the same thing in terms of opening up the ability for people to move value through alternative channels outside of the regulated system. That's why they say this is like the internet. So R3 has assembled some 40-something banks, right, that they're trying to build a platform around. So they're really trying to respond to this challenge here. I think there's some good reasons to be skeptical about how quickly or how effective they may be in responding to this challenge. Part of the problem is going to be, my first job was, I worked in one of these banks. I worked in Bank of America in mergers and acquisitions. So I know a little bit about the inside of bank culture. I also did some IT for Allianz, another large financial services firm. A lot of these entities don't trust each other, and that's part of the reason they're interested in blockchain technology, and it makes sense for them, but they also have a hard time cooperating oftentimes. So this may not happen as quickly as I think a lot of people think it might in terms of all these banks coming together and agreeing on a platform where they're all roughly equal. That that is not going to appeal to a company like Goldman Sachs that thinks they're special and wants a privileged position in the system. You know, I mean, that's a lot of ways how these companies make money. So the very idea of kind of a blockchain, I think, you know, kind of strikes at some of the kind of core strengths or ways that these companies operate. That's going to be problematic. So I'm a little skeptical about how quickly or how effective this initiative is going to be. Nick Szabo, who I'm collaborating with on some research, he's very much one of the pioneers in cryptocurrency and smart contracts. You know, really thinks that, you know, banks are missing the boat by trying to do permissioned, you know, kind of points of control blockchain work. The real opportunity with blockchain is to do something more decentralized, you know, not something like what R3 is trying to do. So that's Nick's view. I want to talk briefly about governance. Again, as a kind of a closing slide here. It's been interesting to see what's happened with Bitcoin and the you know, the block size debate, and kind of looking at other open source movements who still have their founders around, and what kind of difference that's going to make for Bitcoin. Ethereum hasn't run into any of the kind of debates and trouble that I think Bitcoin has recently, and I think part of it's because they still have their founder. You know, if you look at Linux and their history, you know, Linus was always there, I think, to kind of settle debates at the end of the day, the kind of benevolent dictator model of governance, if you will. Bitcoin's kind of missing that. And I think the problems are showing right now in terms of not having that kind of influence, that person. You know, Gavin Andresen never wanted to be a Linus Torvalds. You know, he didn't ask for the keys. Satoshi gave them to him. And just Gavin, by the way, didn't give them to anyone else. That's not very decentralized, right? So there's a problem here, and it's going to be interesting to see how this plays out. But I suspect that at least in the short run, you know, this lack of Satoshi being around is going to be a big issue for Bitcoin. I'm not sure how it gets around that. And just to wrap up, so I think one of the main questions with this technology that we should all be asking ourselves, and this is a debate I think that's going on right now between people like Chris Skinner and Mark Andreessen, is where are we in the life cycle of Bitcoin and blockchain and cryptocurrency and distributed ledgers? Where are we? Are we closer to the early 1970s, you know, when Vint Cerf was inventing TCP/IP? Or are we closer to where Andreessen thinks we are, which is the early 1990s, when he was inventing the browser? That could have huge implications for the billion in venture capital that's been invested, how we structure our business models, how you all think about, you know, playing with this. If we're closer to the 1970s, kind of roughly where Chris Skinner thinks we are, this is more of a 10-year and out kind of proposition, you know, then you need to proceed more cautiously. I really don't know the answer to that, and I'd like to leave that question with you guys to think about and discuss. Yeah, I already covered that in the panel. Thank you very much.
Thanks so much. Do you want to take a couple of questions?
I'd love to.
Yeah. Are there any?
Are there any?
Okay. I'm going to...
Hi. I have a question regarding blockchain and Bitcoin and Ethereum. So you mentioned Bitcoin several times now. What's your view on Ethereum as a possible contender for Bitcoin for uses such as in the blockchain, smart contracts, and so on?
Mm-hmm. I think it's absolutely a contender. I mean, people talked a lot about Ripple before Ethereum really took off as a potential contender, but I've never seen the reaction to Ripple the same way that people have reacted to Ethereum in terms of the enthusiasm, the excitement, the price bubble. Recently, there was a little bit of a prick in that. So there's definitely a different air about Ethereum than there is about Ripple. There's a different buzz in terms of being able to kind of knock off Bitcoin is the big enchilada. But if you talk to Vitalik, he's someone who's really kind of like, we've got a lot of hard slogging still to go. The hardest days are still to come. Ether is not designed to be a currency in the same way that Bitcoin is. I think all the speculation and interest in Ether, it kind of makes him a little nervous. But it certainly, I think, is a really exciting platform. It's just, I think, also got a lot of risk. A lot of people say, basically rule of thumb, if you need to do something with a blockchain today, you need to build on a blockchain, you're better off with something like Bitcoin or something, private, like what Chain does with NASDAQ. If you're thinking more 2 years out, Ethereum might be a safer bet. But I've been very impressed with the people I've met who are associated with Ethereum. It reminds me a lot of the late 90s internet kind of enthusiasm and bright-eyedness, but I also know how that ended. So, yep.
Do we have any more questions? It's the end of a long day, but there is one.
Nothing too technical, I hope.
No, I wanted to know what was your view on the work that the Linux Foundation is doing, and in comparison to the other offerings available today.
So this is something I'd like to learn more about, to be completely honest. But I think it's a great idea, and you may know, I'm sure, a lot more about it than I do. So, but I think it gets at this issue around governance that I think is a big problem for Bitcoin in terms of trying to create a governance structure. To me, I've got a lot of questions around kind of what people's agendas are in terms of why they're engaging with it. I look at digital asset holdings and their involvement in R3, and why are they supporting it? And is this all about trying to create standards? But are standards even appropriate at this juncture? Given where the technology is. So I have a lot of questions, but I think it's a great initiative, and I'm certainly keeping a close eye on it. Yep.
One more.
If you see the subprime crisis in US, the Lehman Brothers downfall, and the banks not trusting each other, how can you see that the banks trust each other in blockchain, and what future would that remain, that the banks don't trust each other?
Yeah, I tried to raise that point exactly. I think that there's good reason to think that they will have a hard time coming to an agreement on something. But having said that, they may be forced to if this develops and pushes them in a way that they kind of have to come together. So a good example of that was in early 2009 when things were still really dark in the financial crisis. The bankers were all crying out and pleading to the regulators, please regulate us. We need you to protect us from ourselves. All right, this is Vikram Pandit, the head of Citibank, saying this. And that song and dance lasted all of 2 months, all right? And then quantitative easing and all these things, and everyone went back to business as usual. But the point is that when the chips are down, if we're going to a world, and I think we will get there, where transactions are instantaneous and there's zero fees basically on transactions, the banks are going to probably be forced to have to cooperate and think about working together, like they were thinking about working together during the 2009 crisis, working with government, and then asking to be regulated. They'll be asking R3 to build something that can help them defend their business models, which is what they're starting to do. But until there's an imminent threat, I think they're going to be reluctant to want to go too far.
I wanted to ask you a question about the banks. I view the banks as having oligopoly, oligopoly. I'm sorry, my English is not that good. And the brand stands for trust. So they invest a lot in brands and trust. And do you think that blockchain technology can move there into transparency and more complete competition, and to break up this role they have as a trusted party and the oligopoly and the value they collect? So what's your view on that?
I think that's a really important question. I like how you focused on brand and trust. Bitcoin has a big brand problem. The brand has certainly been tainted. And it's not the fault of the protocol. It's the Mt. Gox's, it's the illegal activity. In many, if you look at the polling data, in many people's mind, Bitcoin is this kind of dirty, sketchy thing that they don't want to associate, especially with their money, where a lot of people are very conservative around putting their money with, entities that they don't know So trust is a huge issue. Brand is a huge issue. And that's probably, where the Visas and the banks have a real potential, I think, to stop them from being disrupted is it's money, which is something people are very conservative about, and they're already used to looking after people's money. Not to mention the fact you've got these existing safeguards or pseudo-safeguards, perceived safeguards like deposit insurance and these things in place, which create this aura of trust. I always say that when you think about blockchain and Bitcoin, it's important to remember when you're trying to think about what's going to happen to remember that these things don't exist in a vacuum, that what happens macroeconomically could have a huge influence on the progress of Bitcoin and blockchain. Bitcoin's price has been responding positively to financial disruptions in China, and here in Europe with Greece. If there is a big meltdown in China, I mean, that could be really positive for this whole space. If there isn't, that's probably not going to help. So part of this trust issue is how well do policymakers, central bankers, authorities, the banking system do with managing the current system?
Okay, thanks. I think
right.
we're going to put a stop there.
Okay.
Thank you so much.
Thank you.